a condition that many people would call a hangover. And it was completely unexpected. I got blindsided. It's totally not my fault. Absolutely, I was just a victim of peer pressure. So I am hungover, and I apologize to everyone for my lack of professionalism and this general state of disheveled. Anyway, good morning, everybody. Welcome to Moving Home with Charlie. I'm Charlie Lambden, and this is 5 Fact Friday, where I bring a weekly update to anyone who wants to know, but movers and agents alike, to find out what are the 5 or more, sometimes maybe 6 today, the 5 most significant stories in the last 7 days of news that, in my opinion, have the biggest impact on the housing market. Now, some of you will say, "Oh, but Charlie, you're so negative. You're always a doom monger. You're always looking at the negative side of things. You never talk about the positive side of things." And there is some truth in that. I do feel that everyone else who talks about the housing market always talks about how great it is and how everything's fine and up, and everything doubles and triples every 10 years and safe as houses and bricks and mortar and you can't go wrong and house prices always go up. And so I feel it only necessary to make sure that anyone who's especially a first timer coming into the gauntlet lion's den that is the home moving market understands that it is never quite as good as everyone suggests it is. So even though I am one of the most optimistic people I know, I do try and bring a dose of reality to the housing market. And I would like anyone to tell me if you think that I've missed any facts that were reported in the last 7 days that have more impact on the housing market than the 5 facts that I'm presenting, or especially if you think there's something that's more positive, that's definitely relevant. But overall, and I'll do a very short run through of the 5 top facts in just a minute, just a second. But overall, the summary is that all of the news in the last 7 days suggests things are going to continue to improve for first-time buyers by way of more choice and better affordability. But if you're moving house, if you're upsizing, let's assume that the price changes mean that that's a neutral effect on you, but the difficulty of moving is going to get worse. So that's frustrating for you if you are trying to sell and buy. And if you're just trying to sell, I'm afraid, generally speaking, with exceptions, it is mostly getting more and more difficult. So in a nutshell, the 5 top facts of this week are: Yopa has reported that the asking price to sold price gap has widened to 17%, or £62,000 is what they're saying. I have some other data to compare that with from Best Agent. Fact number 2, the number of buy-to-let mortgages taken out, and that's what this one here is. No, it's not. That's actually fact number 4. I told you I was in a mess this morning. The number of buy-to-let mortgages taken out has dropped by 50% in 1 quarter. That's staggering. Number 3, new homes registrations have dropped 23% compared to the same quarter a year earlier. That is also a very big drop. And that, I'll talk about it later when I get into the details. Number 4, the number of UK bankruptcies jumped to the highest in over a year. In fact, with the exception of one weird spike as we came out of the pandemic, it's the highest number of company bankruptcies since 2009. That's business insolvencies. And not the same thing, the number of businesses in distress, therefore have not yet gone bankrupt, has jumped by 1/3. It's a massive increase in both different categories of significant distress and critical distress. And those are a leading indicator of the economy. and employment and wages and that kind of stuff. And then number 6, because I know that people will scream if I don't mention it, oh, mortgage rates have fallen below 4%. No, one product has gone to 3.99%, but only if you have a 40% deposit and only if you pay the £1.5 grand fee. And so it's not really 4%. It's just headline grabbing competition between lenders. It's not that mortgage rates have dropped that much. Anyway, so that's the summary. I'm going to need to, I've got food and drink here. I'm going to have to sustain myself as I go. Hello, Barry. Hello, Jill. Hello, Tufail. Hi, Shirley. Hi, Argy Bargy. Thanks for joining me. Hi, Naida. Hi there. It's Friday morning. I don't know if anyone else has got a hangover and is feeling as rough as I am, but I hope you're not feeling as rough as I am. Okay, let's get into fact number 1. So this is a story that came out in the Property Reporter, and it's about asking prices. It's reported by Yopa. And Yopa's analysis reveals that the average asking price of a home in Britain is, let's just switch those around, make it bigger so you can see it more. The average asking price is basically £366,000. I disagree. We'll come on to that in a second. But the average sold price is £303,000. And that gap has widened by 1% since July 2023. Now, a widening gap between asking prices and sold prices just means more friction for movers. It's harder to sell. It just means that there's too much overvaluing still, and sellers, whether they realize it or not, on the whole, I'm in such a mess today, sorry. Sellers on the whole are continuing to have their expectations set too high by things like Rightmove's asking price index. They keep going, record prices. And so sellers think, then we're not being unrealistic. But yes, you are, because actual prices are not being reported properly and are way lower. As a comparison, and it's not apples with apples, but still, this is Best Agent's asking price data from about a few days ago. This is England only, not Wales or Scotland or Northern Ireland. And what you can see here is that the average, so there's the average asking price of homes that are actually under offer or sale agreed, and that's 355,000. But the average of everything else is actually 467,000. So I don't know where they get their figures from, but their 366,000 is in between those two averages. But the median, which is a much more usable typical price, is 295,000 as the sale agreed price. The sale agreed asking price is not the sold price. The sold price will be lower than that currently. But it does reflect a sort of 60, whatever it is, £1,000 gap between asking. So there we are. 350,000 is then asking price of unsold stuff. And so there's £1,000 difference there. But that's between asking prices, sold prices, likely to be a bit lower, with lots of regional variations and also variations depending on what level of the market you're at, whether you're a first-time buyer or a higher end. And generally speaking, it is true that prices are coming down faster at the higher end of the market. And that at the first-time buyer level, where you're also competing with downsizers, prices are, with regional variations, generally holding up better, but still sliding in some areas. And guys, this my 35% nominal house price, average house price slide over 3 years is continuing. That's why I've never said it would crash. I've always said it would be a slide. And things happen slowly enough as it is in the housing market, but this feels so slow. But as you will see in the facts I'm about to come on a report, all of the indicators suggest further slides to come. So next up we have, and I think this is really quite staggering. So buy-to-let mortgages dropped to record low. And I think actually it's the first time ever that the total amount of buy-to-let lending has contracted rather than increased. So landlords bought the smallest share of UK homes since at least 2010. And this will surprise to nobody who's been watching these things. Landlords have been being taxed and legislated out of existence now for about 8 years. There you are. Tax and regulatory changes introduced since 2016 have been the main culprit. These disincentives to invest have been compounded by higher interest political uncertainty around the threat of more rental reform. Yes, all true. So that's the share of homes bought and sold by landlords in Great Britain. There's that graph, okay. What it means is, of course, so down here it actually talks about the fact the amount of property to rent is very, very low compared to previously, which is why rent prices have stayed high. Here we are. There were 42% fewer rental homes on the market across Britain last month compared with June 2016. Guys, links to all of these article sources are in the description below the video. If you're watching this where you can't get to those links or you can't see those links, go to my website homepage, mhwc.co.uk, and the blog post there today, Friday, is a link, has links to all of these story sources. Okay. And if you're listening to this on the audio podcast, the links are all below in the show notes. So there we go. That is buy-to-let mortgages halving in one quarter. I mean, to me, the biggest news about that is that they've dropped by 50% in one quarter. That's like falling off a cliff, right? That's like buy-to-let mortgages falling off a cliff. Now, there are silver linings and clouds here because the fewer people there are buying properties to rent out as buy-to-let landlords, the more properties are available to first-time buyers. And that's one of the reasons I think this, as well as the asking price to sold price gap widening, which suggests prices are lowering, all of these facts point to a better future for first-time buyers. Right. Yeah, and I've also put this link in there as well. New buy-to-let purchases plummet by 50% in one quarter. And that's the link on X to a lot of stories about the same thing. So you can really dig deep into that and actually get into what's really happening with that, because I think it's significant for lots of reasons for the housing market. Okay, God, I'm really struggling. Sorry, guys, but I think the show must go on, right? Okay, next up, we have new home registration down by 23% in the second quarter of this year compared to the same quarter last year. Now, this is stories on the Independent. This is according to the National House Building Council. Why is this relevant? It's relevant because the government says they're going to be building more homes. And whilst this Q2 is in no way the fault or the responsibility of the current government's promises that they're going to build 1.5 million houses are getting increasingly obviously unattainable, because they're starting from a very, very sharp drop in new homes. I mean, that is a big drop in new homes registrations, 23% in one quarter. All right. And I'm going to just play you this 1 minute of this clip of Kemi Badenoch talking to Angela Rayner and telling her why she's been stitched up. Just 1 minute of this. It's worth listening to. This is just an interesting observation from someone who was in government. I'm not saying I agree or disagree with anything she's saying, but check it out.
So I'm sorry to tell the Right Honourable Lady that her colleagues, the Prime Minister, the Chancellor, and their many advisers have written a manifesto and made promises that are not deliverable and they've hung them around her neck and said, Angie, you go out there and you sell it. I'm sad to see many of her shadow team not sitting beside her as ministers. They worked for free, grinding in opposition for years, only to watch the children of the chosen ones get the ministerial cars and salaries before their maiden speeches are written. Wow.
Golden tickets.
Sue Gray was a lot nicer to me when she worked in my department. I think we know who's in charge, and it's not the Right Honourable Lady. She's been stitched up. They've made her the fall guy. They've promised 1.5 million houses by the end of this parliament. That's over 800 houses per day, and we're already 2 weeks in. And as she goes on, day after day, she's going to realise that a backlog is building and there's no way out. But I want her to know that I'm here for her.
So, guys, a link to that full video. It's worth watching all 13 minutes because she really goes into the ins and outs of housing in government and how hard it really is. So, if anyone cares about how many new homes are built, watch the rest of that video. It's very interesting. You don't have to agree with anything she says or like her or anything like that. Just hear what she says, make up your own mind. But she has. I agree that Angela Rayner has been stitched up and hung out to dry by her party. So next up we have, okay, this is really not good news. Now, why is this relevant to the housing market? Because it tells you where the economy is going. And if the economy is not improving, then neither are wages going to improve or keep improving. And neither is employment going to improve. And therefore, the buying power in the housing market isn't going to improve either. Now, just have a look at this. Right, there was this weird spike there in May 2023. But other than that, June 2024, 2,400 in 1 month in insolvencies. It hasn't been at that level since 2009. And look at the trend. Look at this trend line. Even if you ignore the pandemic low bit, right? From here, the trend is just increasing. It's trending up, which suggests it's going to get worse. So that is the figure of companies that have actually now gone under. But the next fact is about companies in distress that have not yet gone under. All right. So UK businesses in significant financial distress, 602,000, which is up 37% in a year. That's massive. Okay, 600,000 businesses in significant distress, up 37% in a year, and 41 of those in critical distress, up also just over a third in a year. This is important if you're a first-time buyer. If you are being fed the line that, hey, buy because prices go up, and when you need to sell in a few years' time, you'll make money. You need to ask yourself whether or not the economy in the area you want to buy is likely to support rising house prices or not. Because if you get that wrong, and many thousands of first-time buyers get this wrong, you will not be able to sell your home in a few years' time if you've got a mortgage on it, a large loan-to-value mortgage. Because, again, it's up to you to decide how much of a link you think there is between the highest level of corporate insolvencies since 2009, a rising trend, and a huge jump in companies in distress. And this is all because of the huge amounts of debt that they got that they can't maintain because interest rates keep going up. Okay, and the full detail of that article is also in the link below. It's Begbies Trainer, which is a big insolvency, and go and have a look at it. Read it if you want to know what's really happening, and look at the sectors they give you there about which sectors are actually top 10 in critical financial distress. Construction, oh dear. Support services, real estate and property services, oh dear. It's not good. Not good at all. Right. That's 5 facts. Number 6, we have, of course, yes, nationwide cuts mortgage rates as they dip below 4% for the first time since February. Guys, it's 3.99%. but there's a fee that if you can't factor that fee in, it's no longer under 4%. It's only if you've got a 40% deposit. And this is simply a very effective headline grabber. Very effective headline grabber that helps lenders who are competing over shrinking amounts of mortgage business. Buy-to-let borrowing has dropped by 50% in 1 quarter. Imagine what that means if you're in the business of lending money to landlords to buy properties, right? All of these things suggest a weaker and weaker and weaker housing market. And maybe there will or maybe there won't be a Bank of England base rate cut coming in the autumn. But the boss of Lloyds Bank said yesterday that that cut is already priced into mortgage products. So if there is a base rate cut, do not expect further mortgage rate falls to be very big, if at all. All right. They are now basically selling mortgages at a discount to the base rate to try and get business and to tie you in for the long term. Okay. The market is weak, weak, weak. As a first-time buyer, that should give you more choice overall, generally on average. I know there are areas that's not the case. For transaction volumes, this is not good news. However, just going back to the best agent data, there's a tiny bit of positive news in that. Let's just have a look at that for a second. So this is being updated sort of weekly, and you can see here that there's a 0.5% increase in the number of homes showing a sale agreed. That's good, but there's nearly a 2% increase in homes showing for sale in just over a week. So that means that stock is increasing at a faster rate than homes are going for sale. So that again suggests more choice. It makes it harder if you are okay. So I want to wrap this up. If you've got any questions, put them in here, guys. Happy to take any questions now for a few minutes. Just having a quick look. We've got a very important question here. Barry wants to know why I'm wearing my baseball cap back to front. Am I having a midlife crisis? I think I'm about 15 years into my midlife crisis. It's going well. It's just to spare you all the mess that is my hair this morning. And I don't want to wear a peak inside. That's as simple as that. It's just purely. But it's an important question. I'm glad you asked that, Barry. Thanks for that. Yeah, but I'm enjoying my midlife crisis. I've been for some time. Do you know something, guys? Another off the top of my head comment about the housing market. Given the cost of tradespeople, the cost of materials, the cost of maintenance of property, the operating and running costs of property, which we know inflation on that is still running at 6.8% for owner-occupier housing costs, right? It's becoming less and less attractive to buy versus rent. And you've got to remember things about if you're renting, and this isn't so much for first-time buyers, this is perhaps actually for second or third-time buyers. If you've owned a home and you've had the maintenance headaches and the roof repairs and the this and that and the unexpected bills and the boiler goes pop and you get these bills from time to time when you own a house. And given that house prices, in my opinion, especially at the higher end of the market, are going to continue to slide for some time, like a couple of years, at that level, at sort of the family home size of the market, it's worth, if you haven't, just have a look at renting, because you'd be surprised there's some quite nice places at not terrible prices in some parts of the country for rent. And wouldn't it be nice for a couple of years as things are getting tighter, just not have any big bills? House prices aren't going anywhere. They're not going anywhere fast, up or down. They're just not really going anywhere very fast. They're definitely going down faster at the higher end of the market. So for a lot of people who are looking to move, as in to sell and then buy to move into a new house, I would suggest having a look at what's on the market to rent in your area, because also selling and buying is easier if you sell, complete your sale, move into somewhere temporary, rented or not, and then buy separately. And most rental contracts are only 6 months as a minimum. So 6 months, you might go, actually, we can probably find a place to buy in 6 months, and if we don't, we just stay here longer. I think that because of the state of the housing market and because of the mismatch, especially if you're upsizing, it's definitely worth revisiting the question of maybe we should just rent somewhere for a bit and not have all the overheads of running a house and just know exactly what we're paying and that's it. Don't know what you guys think about that. It was a thought that occurred to me recently. Oh, Mark says, I sold because there were large bills pending. That's the other thing. There are a lot of properties coming in the market which clearly need maintenance and stuff, and the owners don't want to have to suck that up. And guys, as a follow-up to the video I did a few days ago about don't make buying a home harder than it needs to be, the same applies for selling. In a nutshell, if you haven't watched that video and you're a first-time buyer, it is worth a watch. It's a bit of a ramble, but I think it is a worthwhile 17 minutes of your life. As a very rough generalization, I reckon that being prepared for your purchase in advance or being prepared for your sale in advance is worth about 2% to you. In other words, a really well-prepared buyer is likely to get a 2% better deal on the house they're buying because sellers are more likely to accept a slightly lower offer when you're ready to go. And it's the same for sellers. If you put your property on the market exchange ready, contract ready, which you're going to have to do anyway if you want to sell it, you're going to be a much more attractive property to buyers that want to move quickly, and you're likely to get more for your home. You're also likely to get a lower fee from your agent. So not being prepared for your move in advance, and don't use agents to get prepared. If you're a buyer, you want to get an independent whole of market mortgage broker, get your decision in principle, find a conveyancer you really trust and like and think is going to give you good service. Have those ready before you go viewing, as long as you're serious about buying. If you're a seller, find a conveyancer first. Don't end up, ask around agents if you're talking to them before you instruct them. Ask around for who's the best conveyancer, and you want, especially in this market where it's hard for sellers, you want the best conveyancer in this market. Being prepared is worth 2% to you in your transaction, in my view, whether you're a buyer or a seller. Not being prepared in advance for your move or your purchase or your sale or both is a pointless false economy and waste of time. It will lead to a slower transaction. It'll lead to an increased chance of your deal falling through, and you're going to miss out on the potential better deal that you could get as a buyer and as a seller by being prepared in advance. I can't stress that enough. I really can't. It just makes so much sense. Yeah, Naida says the bungalow I put an offer on needs extension because the bathroom is through the kitchen, needs a new boiler and heating system, needs complete renovation. I don't think the lady's done anything since she moved. This is the point. RG Bargy says, when will the mainstream media catch up and report the truth? I'm not aware of any mainstream media that does this sort of weekly or even monthly analysis of the housing market from the point of view of all the things that affect it, like I do. I'm not aware of it. If you do know of something, let me know. I'd love to hear about it. But the reason is because all mainstream media relies on advertisers for their income, and banks and lenders and mortgage companies and large estate agents are their advertisers. And publications generally don't like to pump out stories or data or reporting that pisses off their advertisers. I don't have any advertisers, so I don't have that problem. That's the answer to the question, Argy Bargy. Yeah, I'm not convinced there's going to be a rate cut. Maybe there will be. Maybe there will. But it's been the same for the last however long it is since rates got to 5.25%. Everyone's expecting a rate cut next quarter, a rate cut next quarter, a rate cut next quarter, and it hasn't come, and it hasn't come, and it hasn't come. And the market prices it in, and then it doesn't. And then it prices it in again, and then it doesn't. It's happening again. Yeah, I mean, you can start to see signs of weakness, but there are underlying signs of inflation not going away as well. It's very, very hard to call. But if there is one, it's going to be a teeny tiny one. It's not going to make it's not going to move the needle in the housing market. Although you will see and hear the cheers. Yay, they're cutting rates. They've just started and they're going to cut them all the way back to zero. Definitely. I'd like to see the bank's base rate come down to around about 4% and stay there. That would be a healthy long-term place for it to stay. And yes, it will breathe a bit of activity back into the housing market when they do lower rates, but not prices. It's not going to improve prices. Luke and Stan Explore saying, seeing a lot of houses sales fall through after a few months. I've got multiple people messaging me privately every single day about deals falling through. Someone yesterday saying about how a flat in Taunton has fallen through. The agent rang up this cash buyer and said, we're going to give it to you for, it's about 30% off the asking price if you can move quickly. There are real signs of desperation out there. And if you're a seller, don't overprice it. Don't overprice it. Talk to your agent about what price is going to attract competing buyers. Not one buyer, competing funded buyers. That is the only way to discover the best price the market will pay for your home right now. That's the conversation. If you're a serious seller, then you need to get sold. Especially if you're looking to sell and then buy, just find out. You've got a commitment. You haven't got to take the offers. If you're not happy with them, you can change your mind about moving. But sitting there with an asking price and no viewings happening doesn't make any sense for anyone. Wow. GNRVR says, hi Charlie, first time buyer here, bought a property 20k below asking price, about 5%, which we are waiting on completion. Congratulations. Winston Fahrenheit says, fair play on getting out of bed and doing this in your delicate state. I'd have delayed until 1 or 2 o'clock. I wanted to get this out of the way and then I can just collapse. Oh, follow up on GNRVR says, followed your advice and got it over other people who weren't first-time buyers as we were chain-free, even though they offered more. Thanks. Guys, in the description below, I've also put the links to the 2 email offer templates I've got. One for first-time buyers with a mortgage and one for cash buyers. Both of those templates are in the link in the description below. Please follow them to the letter. It's completely impartial and objective and free guidance and advice because it works. I had a fantastic suggestion from someone, I can't remember where the comment was, from a seller saying, could I please do a draft set of terms that sellers can say to agents, these are the terms we want. So it's sellers spelling out the terms and conditions of engagement with their agent rather than the other way around. And actually, that does make a lot of sense for some people and for some agents. And good agents won't, as long as the terms are fair, good agents aren't going to mind that. It's very near the top of the things to do on my list is to put out some email templates for inviting agents around for sellers, and also suggested. I'll be doing that through Best Agent as well. What else do we have here? Ashley Beach says they can't really cut rates much. They need to save that for when the economy falls to bits. Okay. AM has a question saying, how do you go about convincing a seller who wants double what they paid in 2018 that they're vastly overpriced and that's why their house has been sat on the market for 15 months? The most compelling thing you can do is find the most recent land registry reported exchange price or sold price for the most similar property to theirs, and show it to them and say, this is the most recent confirmed actual factual sale price of a house like yours in the area. That's number one. Number two, ask them why they don't think they're getting any offers. Send a letter to them, put it in the letterbox if the agent doesn't want to do that. But there are sellers who are in a position where they can't sell below a certain price. They just can't do it. I don't understand why anyone cares about what I'm wearing. I don't understand why it's of any consequence to anything at all. All right, guys. So let me wrap up with. Oh, was there one more comment there? Lee Marsden says there's a buy-to-let rate at 3.5% with the mortgage works. Yeah, but what's the loan to value on that? 50%? And what's the fee? And how long is it for? It's what are the Americans call it, a teaser rate, don't they? No one's giving high loan to value buy-to-let mortgages at 3.5%. Billy Ray Valentine says, nice shirt, Charlie. Billy Ray Valentine, what a great film that is. Trading Places, what an amazing film. Yeah. All right, guys. I'm not really feeling like I'm much used to humanity this morning. So unless there's anything else anyone would like me to cover, I'm going to wrap it up. I almost said wrap it on the head, knock it on the head. If I can help you, go to my website, mhwc.co.uk, where you will find the ability to book a one-to-one video call with me for buying or selling or renting. And then if you think I can help with your move, sometimes people use that just as a really good sounding board to check their assumptions on their move. Sometimes people ask me to help them with a negotiation. You can also find the first time buyer offer email template, or you can just search for that by going MHWC for moving home with Charlie. MHWC offer email template or cash offer template, you'll find it. And if you are a buyer, make sure you start by having your mortgage and principal ready before you go viewing. You will get the red carpet treatment from most agents. The only ones that don't like it are the ones that have an in-house mortgage broker, but that's their problem, not yours. And if you don't have an independent whole of market mortgage broker that you trust, put my details in here and have a chat with my guys who I've been working with now for a couple of years, and they are really good because they are trustworthy, decent, honest human beings. They're not perfect. No one's perfect, but they are consistently better. And they are there for their customers' long-term interests. And I've had almost nothing but positive feedback over 2 years. So go there. If you want to get a conveyancer, and this is especially for you sellers, go and find a conveyancer before you choose your agent. You will get a lower fee from your agent if you are contract ready. You're going to have to pay for a conveyancer anyway. So get a conveyancer lined up. They only charge a small amount to get the onboarding part done. So you haven't got to pay their full fee to get them set up. But to get contract ready will cost a bit more, but then you are contract ready. And you will know if there are any problems about selling your house. You'll know in advance to save everyone lots of time, including the agent. Please, 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 and buyers as well, have a conveyancer. And if you don't find one or can't find one you can trust, I only work with one company at the moment, and they are an award-winning, outstanding bunch of absolute stars. They're not cheap. You shouldn't want a cheap conveyancer, but if you do, and if I can't talk you out of that silly false economy, these are not the guys for you. These guys are quality and speed and reliability, and someone answers the phone and you get your questions answered, and they solve problems. They don't just find them, they find them and then they solve them, if that's what you want. And last but not least, I'm going to reiterate why buyers need a property pack and why you should ignore your conveyancer who says, oh, no, don't buy that until later. So a lot of buyers don't know about the property pack. So all mortgage lenders require a property search pack to be provided on a property before they lend on it. And I've done a video on it. And actually, if you go to that webpage, you'll see the video link there, I think. So you've got no choice but to do this anyway as a buyer. And the search pack that I provide through this link is 100% legally accepted. No conveyancer can turn it down. They can't turn it down. It is completely legitimate and approved and above board and meets all the standards and all the requirements. You should be, as a buyer, and it says this in my template, you should be offering to purchase that search pack the day your offer is accepted. Okay, why? 2 reasons. First of all, if there's nothing wrong with the property, you speed the process and the transaction up significantly, which increases the chance of the seller accepting your lower offer. And secondly, if there is a problem, the sooner you find out, the less money you've wasted on your conveyancing fees. And that's why conveyancers don't generally say to get it at the start. They go, oh, no, we'll do that later. We'll do that later. Don't do it now, because if we find any problems, it'll be a waste of money. Not true. It's a false economy to not do the property search pack straight away. And if they say, oh, no, we're going to do that. So, no, you can use this one. And any conveyancer that tells you that they can't use it, they are lying. Tell me about it, and I'll get the providers of them to give you the wording you can send to your conveyancer. A lot of them like to do it because they like to sell you their pack, because they make a little bit of a cut on it. That's normal. That's not necessarily a bad thing. But if they want to do that, then say, fine, okay, well, I'll use your one, but I want it today, day one. I want you to order it immediately. I don't want you to wait. And if they say no, then say, well, then I'm going to buy it. Okay, so that's what search packs are about. And you can read all about them on that page, and you can order them from that page as well. Hi, Ricky. Oh, Naida, sorry to hear that. You just got your offer rejected. Just got your email. Hey, Naida, are you happy enough to copy and paste a bit of that email into this video, into the comments, without revealing any sensitive information? Because I'm always interested in the wording of an offer rejection email from an agent, because you can read a lot into the way they word it. Oh yeah, okay. 300k when they're asking 485. Yeah, that's a long way off. I mean, 40% off. So someone here, AM, has said that's a little ambitious, you have to admit. The first property I ever bought, I got 35% off the asking price. It's not unheard of. It's not out of the question. I know about this property yesterday in Taunton, where the agent has offered it to a cash buyer for 30-something% off the asking price. And that's what they're offering it at. So if a property's been around for long enough with no offers, make your offer. Make your offer, guys. Always make your offer. I'm going to shut up now. Guys, it's been great. Thanks very much. I'm going to just politely excuse myself and wish you all a very happy weekend. Remember, if you need a home, you found one you can afford, always buy now, but don't overpay. And if you're a seller, choose your conveyancer and your agent as though your future depends on it, because it does. Thank you, guys. Have a fantastic weekend. If you don't follow me on X, that's the best place to follow me for much more instant reactions to housing market news. I'm Moving Home with Charlie on X. You'll find it. You can listen to these videos on any audio podcast channel, so Spotify or Apple Podcasts, Google, anywhere you like. You can find audio podcasts of these videos. So just go look for Moving Home with Charlie wherever you get your podcasts. Other than that, I'm really going to shut up. Thanks, guys. See you soon. Bye-bye. Thanks for watching, those of you who are watching live.